a bit of a wet blanket for the insurer and perhaps something that it'll be glad to get rid of. But at this price?
Kate, the UK market is quite difficult at the moment, so the fact that it is selling its UK operations, I think, is a positive for the stock. $130 million is what it will receive, but it's expected to make a loss for the FY13 year of $240 million. But of course, it's the Australia and New Zealand business which really drives earnings for Insurance Australia Group. It makes up 98% of Insurance Australia Group earnings. We are watching the forecast for this group very closely. 2013, we're expecting to see gross written premium growth of 9 to 11%, an insurance margin of 11 to 13%. But in fact, 2012 has been a great year for Insurance Australia Group. Most brokers are very positive on the stock, and the stock's up a massive 65% for the year to date so far.
Hey Julia, just quickly taking the viewers across some breaking news. I can just see Caltex has improved its profit outlook. It says 2012 replacement cost operating profit is seen at $145 to $165 million, and it says it sees net debt at the end of December at around $750 million. So we'll keep bringing you details on that one as they emerge. Julia, back to you now. We want to ask you about QE4 in the United States, or QE 3.5, however you want to look at it, and the implications for Australian investors. Now, we've been speaking about this at length for the past couple of days or so, but do you want to weigh in and just tell us how you see this playing out on the Australian market in 2013?
Well, we've seen a number of quantitative easing packages now out of the US, and each one seems to pack a smaller punch than the one before. If we have a look at QE1, that was positive for the markets. We saw the US stock market up by 6%, the Australian stock market up by 7% during that time, but it was really commodity prices which shone, with copper prices up by 63% and gold prices up by a massive 73%. By the time we got to QE2, the markets had started to price that one in early. So if we counted from September, when the markets had started to price that in, we actually saw the US market up by 22%, but the Australian market lagged behind with a rise of only 2.5%. But copper prices still managing to do well with a rise of 23%, and gold prices were up by 20%. But I think for Australian investors, the key thing to consider is the strength of the Aussie dollar throughout quantitative easing. Through QE1, we saw the Aussie dollar rising a massive 26%, and QE2 we saw the Aussie dollar rising 21%. So that really eroded most of the gains that we saw in commodity prices, because of course commodity prices are traded in US dollar terms. So all up, a key consideration of QE4 is going to be that strength in the Aussie dollar. And of course, if we have a look at companies that are affected by the Aussie dollar, it's those companies that make the majority of their revenue offshore. So companies like News Corp, Amcor, as well as Bramble. So we'll be watching these companies very closely, and they could have a potential negative effect from the strength of the Aussie dollar.
Okay, let's take a look at what's expected from the market today. Broadly, we saw commodity prices lower overnight, but we saw the iron ore price hold steady. BHP and Rio both up in London trade. So what should we be looking at the open, Julia?
Well, the leads are looking quite negative. If we have a look at the US market, it was down by 0.6%, and commodity prices also negative. Gold was down by 1.2%, and silver prices had quite a steep fall, down by 3.5%, while we did see copper prices down by 1.3% and oil prices down by 0.8%. So it does look like it's going to be a difficult day for the Aussie share market, but it does follow on from a pretty good week so far. We're up 0.8% in the week to date, and if we manage to see a gain this week, that would mark the 4th consecutive week of gains for the Aussie share market. And of course, this week has been one where we have seen the Aussie share market reaching that 17-month high. But all up, it does look like it's going to be a hard day for the Australian market. We are still expecting those material stocks to drag on our market today.